Hello everyone, it's me Samuel from Finance Analytics Services Team LLC again. I know the market has been very rough last week, but actually if you look at what is on the screen right now, Dow Jones Industrial Average were actually up 1.92%, regardless of the volatility and in the intradays of the 5 days, is actually end up 655 points higher. It have been marked by huge daily swing in the major indices last week, with the Nasdaq index that used to be darling of investors hitting near bear market territory at one point Monday with a loss of 19% from November record high. Dow Jones Industrial Average also at one point fell by 1,000 points, and you can see on Monday, and then actually kind of rebound back on later of the day. And with that, Nasdaq also lagged at 4% losses. Well, even despite that, I mean, there's always some stocks still performing better than the market and actually up. So, Coast, symbol KSS, while more than a 30% report that the company has a trading offer from two suitors. FAAMNG, unfortunately, on Monday are actually starting at, sectional, to end with that. And Tuesday, futures also dropping of another wireless day. The market wasn't looking that good. I mean, we're ahead of a Federal Reserve meeting. People will kind of look forward and kind of waiting for the news. So you can see the market on Tuesday. I mean, even though it was actually dropping as well, but then you kind of, bounce it back, and then at the end it's also dropping a little bit lower, but turned to be positive in Dow to open wealth and with a Nasdaq, similar, paint a similar picture. It was going up and then you're going down, and then the market before closing section is kind of moving up in the direction as well. Um, so on that day, Tuesday, though, CEO Elon Musk make a joke again and saying if Happy Meal will actually McDonald's accept Dogecoin for accept Dogecoin, then he will eat a Happy Meal on McDonald's. So then Dogecoin was actually up 8% on Tuesday. S&P 500 also fell 0.2%, being down by 1% intraday. Despite and then Microsoft reporting earnings, and even you deliver solidly, it still fell 3% after market. So it's kind of interesting. And I will go over these two graphs later, which is the earnings of the company when I got there. And three major stock and still grip widely in the final session, minute of session that ended with the Dow joining the S&P in negative territory. The S&P 500 ended lower on Wednesday as well. So Wednesday is another day that was really, really kind of interesting enough. It's kind of moving around as well. You can see that that we're actually kind of dipping a little bit, very dip here, and then going back up, and during the day of the sections, when Fed was kind of talking about what happened with the tapering, and as well as the interest rate potentially, whether you're going to be increased or how many terms. The market actually, the point was actually rebounded pretty significantly, but then as the Q&A session started kick off, Powell was actually leaving a room for potential adjustment or increase another quarter, another terms of interest rate. Then the stock market started, actually dropping down. So that's another, challenges there. And GE also GE fell 6% on Tuesday, reporting missing Wall Street estimate. Johnson & Johnson also reported mixed quarterly result, revenue fell short, so the stock also come back down. But then they were saying that with the COVID vaccine will generate $3 billion to $3.5 billion sales in 2022. Tesla announced earnings per share of $2.54 on revenue of $17.72 billion. Even that was beating the estimate. They also reporting that actually have to be given actually delay the production of the truck due to the the chip shortages. So maybe because of that, the investor wasn't reacted positive despite the earnings that were fantastic. So the stock itself have actually dropped $130 in that day after the announcement. So that's why you can see, from 900 lush, you dropped it to as low as 820, and then Friday Tesla kind of a little bit rebounding it. So you have recognized this is showing you this. Actually, that Tesla, if you look at the earnings, did pretty well. You also both of them beating the and both estimate and earning per share actually beat earnings forecast. Just kind of solidly delivery, but yet and then necessarily obviously the quarters quarter to quarter kind of showing that you're also beating the estimates, and also the revenue apparently is actually growing quarter by quarter too. I mean at least from the last 2 quarters. So I mean the stock is dropping down, and I also know that analysts actually now predicting and saying Tesla is way overvalued, and one of the analysts ran it as low as Tesla only worth $250. Really, this doesn't make any sense, because if you think about last year, Tesla wasn't even making money, right? And then it was actually even have $400 when they did not make money, and then they started, kind of make money and have the discussion whether they were making a Nasdaq or not, right? When they're making Nasdaq, the stock turned around from growing from $700 to $900, push it up, and then you continue with slowly, because of the Bitcoin going up and so on, and actually their sales estimate have been continue beating. So then you actually went up to $1,200. So now, if you think about it, it's really, to me, it's a discount. Even though the market now, because of everything is done and everything may look cheaper than you used to be, then people were kind of saying Tesla doesn't worth that much money. Even $850 is overvalued. It could be potentially drop it back down to $700 or whatever. But my point, I'm thinking if the Bitcoin, which now currently at 38,000, but as well as 36,000 early of the previous week, early of the week, you actually, if you hit over 40,000, even let's say 45,000, then I see Tesla will go back to $900 plus. So, of course, if there's a going on the tension of the Russia and Ukraine, if the war going on, and then China also take over Taiwan, I mean, this thing is kind of out of control, it's not in the norms, then obviously you will seriously impacting the stock market. And you know that in historical telling you, when the war happened, the stock market crashed. So right now, the reason why we're in an oversold territory, despite the fact that, I mean, stock have been record high, really too high, to a point people believing, you can't go up 2 years like that with inflation pressure and kind of Fed tapering, which means not the money on the side will start to shrinking. The market just keep depressing with profit taking, right? So, like I said, unless there's war, which obviously if war happens, people don't even think about stock market, think about their job, they think about their life, make sure they don't die, they're safe and have bread and food. So I hope that's not going to happen, and that would actually tease it back. TET also, oil price have been regularly up. If you look at the energy stock recently, you probably, except Chevron report their earnings but disappointing, so they didn't meet their estimates. So actually, the stock have been down on Friday. But other than that, if you look at energy stock, it have been up this week because WTI hit $90. So this is just giving history of the oil prices, and now JP Morgan even estimate $150 a barrel. And a lot of analysts think you will definitely over $100 a barrel with the tension between the Russia and Ukraine. I personally hope that's not going to happen, because if you really hit in that point, while energy stock could have go up or could actually depress into, the stock market definitely will be in an even worse situation than we are at right now. And the world was actually very unstable, with very anxiety of what's next, with Omicron, which is the pandemic still around. So this will not be a very good situation to be in. Of course, there's always some people make money off of chaos, right? So, and then that's just touching base to kind of give you an update of what happened. Russia and Ukraine issue continue to hold a major spot in the minds of traders. Traders seem to believe that a potential Russian invasion of Ukraine will lead to a dislocation of the oil market and supply disruption, and that's what driving oil prices up. The United States and NATO have made a concession to main Russian demand to resolve the crisis over Ukraine, including giving Moscow a guarantee that its Western neighbor can never join the alliance. There really no positive response right now to Russia's demand for the non-expansion NATO and the non-deployment weapon that Russia views as a threat. Ukraine foreign minister said no decision on Ukraine without Ukraine. And this is really a quote, real life from German foreign prime minister, because they're not going to put troops over there, but they will probably provide some economic support needed. And she said, a soccer team doesn't need 11 center forwards who will do the same thing, but 11 players who get along well and have a common game plan in mind, she told the lawmakers. So this is I really like this quote because I think this is not just applying with the situation, but in reality, a lot of time when we do things together, the cooperation with a major common theme, and you allocate it, and you kind of delegate the work very, very correctly to the right arms of people, right hands of people, it most likely have to, drive into success. Then maybe you have two people who are very strong in the same thing and focus on that. So I kind of understand her point, which is pretty good. On Thursday, the market continued to be pretty volatile as well. So market opened higher but diminished all again to close negative. The moves were driven by, at the beginning when it was up, it was driven by the better U.S. GDP number, and inflation kept the gains and caused the late day selling. So because there's still concern of inflation despite that. And if you look at Nasdaq, even though the week really have gone back up, for 2.14%, but for the month, it's still down at 12.52%. So without the push on Friday, it actually will be like a 15% down on Nasdaq, which is very serious. And this is just a week, right? The previous week also down, just bear that in mind. And also the U.S. Jobless claim number declined for the first time in 4 weeks, which was saying that the economic growth is consistent in the U.S. market. That's why it was viewed as a positive news. And despite Tesla was kind of even though it beat and the prices were down, kind of disappointing the market and drove the indexes also decline. Apple actually announced a pretty strong good news. So Apple, this is actually the graph of Apple, how solid and how great they have been delivering the result. And share closing in the 200 line higher. Apple report saying beat earnings per share by 11% and revenue at 123.95 billion. So it was actually this one, Apple, which is really 123.95 billion. iPhone revenue, which makes up half of total revenue, rose to 71.6 billion from 65 billion a year earlier, beating estimate at 68.34 billion. Stock actually rose 5% after market until Friday, up from 158 low points of the week to back to 171 to end with, which is pretty good. And then 3 trillion mark was $182. So they still have a way to go, but this is again showing up. Apple is the same story with Tesla. Pretty much is quarter to quarter consistently actually have been beating the estimate. And then both earnings and revenue, and you actually see the bar of the revenue, which are actually the highest in the last compared to last 4 consecutive quarters, and so does the earning per share. And part of it also is the recovery of the sales in the Chinese market of the iPhone. So it's just showing a pretty strong market. It's very hard to imagine what happened if the Apple Car came, and really start to create it and get it done by 2024, early 2024, maybe the people will start to buy that. There's also a rumor that Apple may buy Peloton, but we don't know about that. Peloton have been pretty beat up now with the shares is actually a lot lower than the IPO price, but the stock have been gone up very, very well. So again, from an index perspective, on the two, if you look at 2 months and from the month perspective, it was down really, really a lot and got beat up pretty bad. But on individual stock, you look at growth stock in particular, they actually were even bit of a worse. Like we talked about Chinese stock before, and it was actually a bit of like Pinduoduo from $212 down to the $43 lowest at a point. Bilibili $150 down to like even now 30 some dollars. And a lot of Chinese stock actually lost 75% of value if you do the math. Same thing now, you can see Robots, RBLX, despite the quarter earnings strong, they actually were beating up now. IPO price $70, they were as low as $53 earlier of the week. Also, looking at AI, which is C3, that's a simple AI, it actually going the strongest. When they were really high, they were at over $100 value. Now they dropped it as low as $22. And then look at Zoom, they were 52 weeks out of $515. Now they got beat up to $150. Netflix, when they reported earnings the previous week, was really, really beat up, from a $550 slid to $380. All these stock giving you, if you do the math from a high point 52 weeks high to where they are at, I mean, individual stock looking at not the index itself, because the index is mixed up a much broader stock and mix. Some of them still up. They were actually put up pretty badly from 40% to 75%. So from that perspective, unless, we will have a war and, things are really getting bad, and then a bunch of layoff or job disruption, I just don't see that, how you would think this is, further correction coming, another 5% would be very serious, because some stock meaning they will lose another 10% value from compared to the peak with only a 15% left, and unless they go bankruptcy, then it's zero. You lost some money. Right now, definitely not the time to sell those stock anymore because you're too late, right? So instead, I actually encourage to buy more to dilute where you're at, and HYLN would be another good example that, at $5 I think is a very good value, and they drop as low as $3.80. So I think once they announce earning, and they hopefully will get the contract signed up with the first time having revenues, things may turn around, and it will be a little bit different. So some of these are very, I think right now, yes, there's still a downside potential with some of the disrupting uncertainty, but if it go down further, that will go up. There's a lot of, also there's a lot of things kind of, while people were dumping their stock, some analysts actually believing that the market will be, still have a momentum back to, rebounding to higher. So for example, the Tom Lee, the front, the analysts which have been right, although he didn't get it right in the Dow Jones, he think it will hit 40,000. He didn't hit that, and then S&P 500, he think it may hit 4,800, never reached that level in 2021. And it worked, but what he was playing around the market with the downside by the dip and rebounding to a higher level, it actually happened the last 2 years. So he had been, kind of predicted correctly in the big picture perspective. He thinks this. The faster the decline, the faster the recovery. And he also thinks Microsoft, Apple stock with a PEs of 33 and 28 respectively, that may be actually a better stock to consider to buy. And then that's UBS also saying that the sell-off in stock market is not a growth scale and fundamental are strong despite the recent valuation shock. But what the challenges is, it could be because of the multiple compression. So what is the multiple compression? It means when earnings for a company have risen, which means keep going up like Apple, Microsoft, and Netflix and Tesla, but the price of the share hasn't increased. So in fact, we're seeing a sell-off going down. So that really is the scary part. The company continue to grow from a valuation perspective, probably still sustainable, but yet the market overall thing is already overvalued and push it down. Which is kind of interesting. If everything inflation from that sake, you think about your iPhone, maybe you have to buy more expensive. Starbucks going to raise the price of their coffee. You go to buy the beef, and Biden trying to cut the cost of beef, and you buy some Chinese food and foreign goods, and actually the price has gone up a little bit, quite a bit, over 10% or so, then why actually stock will be declining, right? Because your assets are supposed to go up as well, which is your investment, which in this case will be the stock. So something to think about. The interesting thing is, while people were saying it's overvalued, my argument is, if everything inflated, then why the stock market would not go up further along with this inflation? Unless we're going to control and the Fed tapering and everything and coming back down, then I'm thinking rationally, then yeah, the stock market will be cooling off and going down to the way it should be. Otherwise, your assets should keep going up. Otherwise, you can't catch up with inflation. That means you're not actually better off, and the purchasing power actually got lower, right? But sometimes the rationalization, it doesn't work that way. Just like if there's a war, then everything I just said, you can just disrupt them because we're actually in big trouble. But the first thing you think about is your safety. Just like when I got sick with COVID, I really don't look at the stock market. I really don't have interest to do anything but just lay on the bed, sleep and rest, drink a lot of water, and think about if I'm dying or not, and why would I get COVID? What is the cure? And I actually did a lot more research during time when I get COVID and figure out what in the world really COVID is about. What is what is this Omicron is about? And that's why I, for those who hear my video, knowing that I'm trying to give my experience, sharing how it is, and it kind of hopefully can change some of the perceptions, right? Some of the article and things that said about Omicron may not be correct, and sometimes that's where when things matter to you, you spend a lot more time researching on it. Part of the thing is also the CDC guideline 2 to 5 days. I'm still challenging that. I don't understand if that is true. Then why Asia will be a lot more sensitive, 14 days or even 21-day quarantine. The other thing is between Tuesday and Thursday, you see a very high volatility, but hopefully these are mostly driven by the day traders, people who take advantage of it. The previous video have shown you that with the market on the intraday showing a dip about 3%, people botting in, and then you push it back up 2%, or even sometimes you really correct to push up higher. They'll just give up the gain. They will just sell it off and give up the gain and take the profit, because there's extra money that they put in the market and take the money right away in the same day. So it's almost like free money. So that is really driving the market. Unless your volume continue to be not just day trader but other funds putting in, you could have mixed results. So sometimes when the market going down, we'll continue testing another lower technical point and a low points. You want to see the rebound with a stronger volume, then you knew that eventually this selling off of people trying to push the market down will be over by taken by the people who are interested in buying into the market. And again, the strong earnings so far with all these big corporations hopefully suggested the sustainability and market valuation. So then we're going so that you will actually will go back up, and also people investing now should have price in the Fed meeting when it over, understand the interest rate was going to happen. Inflation basically probably make it clear it's going to be stay for a while. We all know that. We don't have a hope going down. Well, oils, we kind of know that we're seeing less leaving $95 a barrel. What's going to happen to the gas station? I mean, this stuff is kind of not a surprising news anymore. And yield curve, as long as it's kind of, I would say 1.75% and keep it that way, not higher than 1.8% definitely, the market already reacted to it because that's just where we are on the treasury yield already. So hopefully there's some good news and positive things and more money on the sideline and so on. we're driving the market and continuously good earnings to support the market, saying that really oversold territory that should rebound back. And if the 3 days in a row they're going up, which Friday is a day definitely solidly rebounding, as you can see some of these graphs is very solid, that in a day you give back about 2%. I think it's less than even 2.3% just a day gain. We can see that potentially the market is actually the correction kind of over, at least for the short-term basis, and you will push it back to try back to the 50 days average. And from a technical perspective, if we were doing it, then you may push up. And obviously, it's not going to be higher than, let's say higher than 3 weeks ago or a month ago. When you look at the Nasdaq graph, which suggested that this 13% drop. But again, the individual stock, if you push it back up for those stocks that already lost 75% of the value because of the oversold or profit taking, whatever you want to call it, and that will be potentially driving back 20-25% up. I think that would pretty good thing to happen if you bought it at the deep, right? And then on those points, then you actually probably will help you average it out and make and gain back. But at this point, I would say if you see the market rebound back, small stock you did see coming back 20% to where you were, then you may consider at least take out some of them and leave and decrease your exposures. They call de-risking, and then you leave the cash on the side, which cash is the king, and looking for opportunity again to buy, because this may drag. If February maybe go up a little bit and then come back down, the next buying point could be have to be next earning reporting, which is you won't buy till the March timeline. So, but right now, because like I said, I wouldn't suggest selling unless you think there will be a war and World War III or whatever you want to call it. It's because the market is already so bad now. It's too late to get out of the market. The only methodology possibly is actually diluting or buying more or taking some day gains, just like those day traders become more short-term focused now to recover some of the losses that you had previously. And then with more cash, you find a good purchasing point, and then just waiting for the long term, because historical market always show you that even in 2008 market crash, you always come back and you will drive it higher than than the point that you probably bought at, that you think is at the deep. So I think right now the correction territory is already very steep enough. If it can going back and rebounding in the following week and testing another lower point, then maybe another 10% index correction would be already very steep, right? Then it will be a 25% correction on the Nasdaq Dow, maybe then will be a 15%. But then individual stock, again, a lot of them got beat up so badly that if they go down another the index go down that much, that means that stock will only have 10% value out of the peak. Then you probably can't do anything with it, right? Or you basically gave up and think the stock was going to go bankruptcy. So that's another bad that you have to look at, is why the growth stock kind of in this disadvantage at this point, because if it's go down bad enough, then it's really very difficult to rebound unless the stock can show good news or making profit, right? Because otherwise they're burning cash every day and they have to go to finance arrangement, and you have to look at the balance sheet to see how their liability and assets stand. Hopefully next week will be rebounding and actually test another high again from the average standpoint, and we will closely monitoring, and hopefully there's no war. I'm definitely not a supporter of war, and I hope we are supposed to driving to work together, with different people around the group to create a better world to live. Thank you very much. And one last thing too is, what we're still living with the pandemic. We still need to be very careful about it. We still need to be washing hands. Make sure if we suspect that we got it, then we should go testing, trying to get quarantined, and don't pass it to your loved ones or your friends. Thank you.